Good morning. Thank you for the opportunity to present the National Cotton Council's economic outlook for U.S. and international cotton markets. While the presentation will focus on a few highlights, a summary document will be available at the end of the session, and a full report will be available on our website. So while cotton prices reached the highest level in over a decade, input costs have also increased significantly, and in some cases reaching all-time highs. The global economy recovered at a much faster pace than expected, and world cotton demand continues to increase. However, the lingering effects of the COVID pandemic shock to global trade have created an unprecedented level of stress and disruption on the entire supply chain, from transportation costs to labor availability. Before looking ahead to the coming year, we'll start with a quick review of the balance sheet for the current marketing year. Strong demand for U.S. cotton is evident in the weekly export sales data. As of February 3rd, total commitments reached 13 million bales for the 2021 marketing year, which is slightly above the 5-year average at this point in the marketing year. However, while sales have been strong, shipments are lagging behind the 5-year average pace. In addition to the disruptions and delays caused by transportation issues, cotton shipments in the early months of the 2021 marketing year also suffered from a lack of available supply. As of February 3rd, shipments totaled 4.5 million bales. This was 3.2 million bales behind last year and 1.1 million bales behind the 5-year average. At just over the halfway point of the marketing year, there remains a lot of uncertainty about how much cotton will be shipped by July 31st. In the WASDE report released a few days ago, USDA lowered the 2021 export estimate to 14.75 million bales, as compared to their earlier estimate of 15 million. With 25 weeks remaining in the marketing year, average weekly shipments need to be just over 400,000 bales to reach the USDA estimate. As you can see from the chart, average weekly shipments over the last 10 years for weeks 28 through 52 have only been above 400,000 bales once. To reach 14.75 million, we need to ship 10% more than the 5-year average pace of 365,000 bales per week in a year with major transportation and logistics issues. So with this in mind, the NCC estimate for 2021 U.S. exports is 13.8 million bales. To reach 13.8 million in shipments by July 31st, weekly shipments will need to average 370,000 bales, which is slightly above the 5-year average pace. Again, the sales are on the books, but the question remains about how soon we see some relief in the logistics issues. The U.S. crop is estimated to be 17.6 million bales for the 2021 crop year, which is 3 million bales higher than last year. The 2021 NCC mill use estimate of 2.58 million is slightly above the latest USDA estimate. As one of the largest markets for U.S. cotton, U.S. mills continue to be critically important to the health of the U.S. cotton industry. With 13.8 million in exports, ending stocks are projected to increase to 4.35 million for the 2021 crop year. While higher stocks generally correlate with lower prices, we think the price impacts will be mitigated since the cotton is sold and would likely be shipped in the first few months of the 2022 marketing year. Turning our attention to the supply side, the 2022 survey was distributed in mid-December with responses collected through mid-January. Respondents were asked to provide their plantings of cotton, corn, soybeans, wheat, and other crops for 2021 and intended acreage for 2022. So as always, the survey results should be viewed as a measure of grower intentions prevailing at the time the survey was conducted. So relative to the average futures prices in the first quarter of 2021, cotton prices during the survey period were up by almost 15%, corn prices were trading about 20% higher, and soybean prices were trading about 7% higher. So in 2021, the January to March average futures prices for cotton, corn, and soybeans were 81 cents, $4.60 per bushel, and then $11.91 per bushel. During the 2022 survey period, the average futures prices for cotton, corn, and soybeans were 93 cents a pound, $5.51 per bushel, and $12.76 per bushel. So as compared to the average prices in January to March 2021, the cotton to corn price ratio during the 22 survey period was lower, while the cotton to soybean price ratio was higher. It's important to call attention to the ratios, as experience has shown that these ratios are reliable indicators of changes in cotton acreage. Historical data over the past 10 years shows a clear relationship between the price ratio and changes in cotton acreage. So while an increase or decrease in the price ratio generally indicates an increase or decrease in cotton acreage, producers also consider relative returns of competing commodities. For 2022, production cost and input availability will be key factors in acreage decisions, particularly with higher input prices and supply chain disruptions. Most producers are expecting a significant increase in input costs in 2022, largely due to higher fertilizer and chemical costs. Fertilizer prices are about 55 to 120% higher than a year ago, while fuel prices are about 60% higher. Overall, production costs for cotton, corn, and soybeans are expected to be about 10 to 20% higher than last year. Since fertilizer costs account for a larger percentage of the production budget for corn, fertilizer price and availability will likely have a larger impact on corn acreage. So a review of the Council survey will begin with a look at the Southeast. Southeast respondents indicate a 3.7% increase in cotton acreage to 2.4 million. Acreage is expected to increase in all states except Florida. Now, according to the survey responses, the expected increase in cotton acres is due to a decline in corn acres and peanut acres to a lesser extent. And with Florida, with a 4% decline, it's the only state showing a decrease in cotton acres, and most of those producers are shifting to soybeans. Mid-South growers intend to plant 1.9 million acres, an increase of 14.6% from the previous year. Across the region, all states intend to increase cotton acreage, with the survey indicating a shift from corn to cotton. 3 of the states show double-digit percentage increases, with the largest increase of 51% in Louisiana. Southwest growers intend to increase cotton acreage by 7% to 7.4 million acres. Each of the 3 states plan to increase cotton acres. Responses indicate a shift from sorghum to cotton, with Texas producers also planting less wheat. With intentions of 156,000 acres, producers in the West expect to plant 14.1% less acres of upland cotton. Upland acreage is expected to decrease in Arizona and California and increase in New Mexico. Water constraints continue to impact planting decisions in Arizona and California. ELS acreage is expected to increase by 24.8% in 2022 to 158,000 acres as growers respond to all-time high ELS prices. So overall, U.S. producers intend to plant 12 million cotton acres this spring, up 7.3% from 2021. Upland intentions are 11.9 million, which is up 7.1% from 2021, while ELS intentions represent a 24.8% increase. So again, based on market conditions during the survey period, growers intend to plant 12 million acres in 2022. Since the survey period was conducted, prices of all commodities have continued to increase. Cotton prices are up by 13.5%, corn prices are 8% higher, soybean prices are 13.2% higher. So looking at the ratios, the cotton to corn price ratio increased, while the cotton to soybean price ratio is unchanged. Planted acreage is just one of the factors that will determine supplies of cotton and cottonseed. Ultimately, weather events, insect pressures, and agronomic conditions play a significant role in determining crop size. Since the NCC Economic Outlook does not attempt to forecast weather patterns, the standard convention is to assume yields in line with recent trends and abandonment consistent with historical averages. However, looking at the latest U.S. Drought Monitor map, Texas abandonment could be higher than average in 2022. From this map, you can see that drought conditions in the Southwest are a bit more severe than at the same time last year. However, if you remember last year, the drought conditions in Texas became more severe from February to May, and then enough rainfall was received to diminish drought concerns for the 2021 crop. Water availability in the West will also play an important role in final acreage numbers for 2022. So based on the state-level 10-year average abandonment rates and a 5-year average yields, 2022 harvested acres is estimated to be 9.8 million, with an overall abandonment rate of 18.9%. U.S. production is estimated to be 17.3 million bales, with an average yield of 850 pounds per acre, which includes 16.8 million bales of upland and 438,000 ELS. So as we look at the balance sheet for 2022, the U.S. production estimate of 17.3 million is 350,000 bales lower than last year due to a larger percentage of unharvested acreage. Based on recent seed-to-lint ratios, cottonseed production is estimated at 5.3 million tons for 2022. U.S. mill use is projected to reach 2.7 million bales for the 2022 marketing year. The NCC monthly mill surveys continue to show a recovery in U.S. mill use from the low observed in the 2019 marketing year. Cotton and textile trade in the Western Hemisphere remains an important factor for the U.S. textile industry and also presents opportunities for future growth. So to understand the potential for U.S. cotton exports for the coming year, we'll first look at the expectations for key importing countries. In this outlook, modest increases in consumption are expected for the major cotton-consuming countries. And with higher consumption, imports are projected to increase for most of those major cotton-consuming countries. China's imports in the 2022 marketing year are expected to increase to 11.2 million as mill use shows modest growth and production is expected to decline by about 450,000 bales. China has imported more U.S. cotton in 2020 and 2021 as part of the Phase 1 trade agreement. Although the Phase 1 agreement did not include specific commitments for 2022, China's current tariff exclusion process relating to the U.S. cotton is assumed to continue throughout the time frame of this outlook. However, with increased tensions between the U.S. and China due to the U.S. government's increased focus on addressing forced labor allegations in China, imports of U.S. cotton will be monitored closely. Vietnam, Pakistan, and Turkey will remain important markets for U.S. cotton and are expected to import more cotton in the coming year. With expanded consumption in key importing countries, world trade is projected to increase in 2022. U.S. exports should receive a boost for the 2022 marketing year, with cotton sold but not shipped during the current marketing year. However, we fully expect Brazil and Australia to provide more export competition for the U.S. in 2022. So based on trade positions for the major countries, the U.S. export estimate for the 2022 marketing year is 15.8 million bales, which is 2 million bales higher than the 2021 estimate. So based on the NCC estimates, U.S. ending stocks are projected to decline to 3.1 million for the 2022 marketing year. If realized, the stock level would be one of the lowest levels in the last 20 years. World production is estimated to increase in 2021 due to higher acreage. World mill use is projected to increase to almost 126 million, which represents an all-time high for cotton demand. Ending stocks are projected to decline by 3.4 million bales in the 2022 marketing year, resulting in a stocks-to-use ratio of 65%. So while the Council's economic outlook does not attempt to project cotton prices, it's important to review some of the factors shaping the current price situation. A tighter U.S. balance sheet, supply chain disruptions, spec money flow, overall inflation in commodity prices, and a strong demand are creating a bullish sentiment for cotton prices. So with the highest prices in more than a decade, it is very important for growers to carefully review their farm safety net options for the 2022 crop year. In previous years, PLC was the preferred option for cotton. However, in the current price environment, we would need to see a significant price decline in order to trigger a PLC payment. Growers are encouraged to evaluate their insurance options such as stacks, SCO, or ECO. However, growers are not allowed to purchase stacks on the same farm number if seed cotton base acres are enrolled in ARC or PLC. So this chart just shows an example of projected stacks and PLC payments as the harvest price declines. The PLC payment is based on the NASS marketing year average price, which, based on historical data, is assumed to be about 8 cents below the December New York futures price. So PLC would not trigger until the futures price is 77 cents or lower, or the NASS marketing year average price is 69 cents. So at 77 cents, the net stacks indemnity in this example would be over $120 per acre. And then if we assume a yield loss as well, the stacks payments would be a bit higher as well. So as with any outlook, there are a number of risks and uncertainties shaping the projections. On the supply side, producers may experience additional production challenges due to higher input prices, input availability issues, and weather conditions. On the demand side, more restrictions related to the COVID-19 pandemic, a slowdown in world economic activity, increased tensions between the U.S. and China, and low man-made fiber prices have the potential to dampen cotton demand and put downward pressure on cotton prices in 2022. Mr. Chairman, that concludes my report.